So many stories in the media about the market, Wall Street, and bankruptcy. How does all of this affect you? Chuck Sederstrom with Finance One joins us now with more. Chuck, here we go again.
Here we go again, Courtney. We just keep getting dealt these ugly cards, but it certainly gives us something to talk about here on Financial Fridays. Good morning.
Well, good morning to you, darling. I really want to know how this is going to affect all of us.
You bet. Let's touch on some of the recent events. You know, we talked about this a little bit last week, Courtney. More has happened in the meantime. Last time we talked about the Freddie Mac Fannie Mae takeover by the federal government. We already know about that. In the meantime, a 158-year-old firm, Lehman Brothers, files for bankruptcy.
Right.
This is quite unprecedented. That was a biggie. In addition, we had Merrill Lynch being announced to be bought out by Bank of America. Huge event. All of a sudden, some of the other investment houses, by the way, are being suspect. In the meantime, just the other day, the Federal Reserve announced an $85 billion bailout loan to AIG, the world's largest insurance company, and much of this was based on so-called bad lending. So that's what's happened. What does this mean to you and me and our viewers? You know, this isn't good news, Courtney. I'm not going to try to candy coat something that shouldn't be candy coated. But here's some key facts. Number one, I've been asked by many people, gosh, if I have my 401k through Lehman Brothers, am I in trouble? No. The 401k was actually invested in equities and investments in other companies. Lehman, or any investment company, simply manages that. So nothing to fear with respect to whether or not your account is being managed by one of these companies. The ownership is actually in other companies. That said, Courtney, at the end of this month, the third quarter statements come out for 401ks. People are, and I think we need to let everybody know, they're going to be a little shocked because the values of a lot of these companies, i.e. the stock market, has gone down. So most people's 401k and retirement statements are going to reflect that. So regardless of whether or not the net amounts are safe by virtue of, say, a Lehman bankruptcy, the fact is what they're invested in probably has reduced in value. We need to be prepared for that. Now, some other little bits and pieces of news that kind of surround this, and trying to focus a little bit on maybe some more positive aspects of it. You know, interestingly, with people, investors selling out of the stock market, they're investing in mortgage-backed securities, considered a safe investment. So, in fact, mortgage interest rates have, in fact, dropped in the meantime. We're talking about rates below 6% now, Courtney, 5 3/4, 5.875. Again, that's very positive for our viewers and those that are looking to purchase a home. We've continued the mantra. Now's the time to buy. We've got great interest rates. Now, interestingly, I had an individual come to me the other day and say, you know, Chuck, I've heard what you've had to say. I've heard what Courtney has to say, that now's the time to buy. But I'm concerned. If I buy today, is not my value going to go down? You know, we listen to the news. A lot of it is nationally generated. And across the United States, there are pocket areas that are very, very severe. Nebraska and Omaha simply are not one of them. Let me illustrate it to you this way. Many of the lenders that we deal with, I deal with, big national concerns, they are identifying counties and states throughout the United States they consider to be declining areas, areas of concern. I just got a list earlier this week. Of the 50 states, there are 45 states represented on this list. Nebraska is not one of them. There is not one county in Nebraska that is being identified as a declining area or a troubled area in the United States. So while we can agree that nationally and certainly in some pocket areas, Florida keeps coming up, Arizona, Southern California, Nebraska, good old Nebraska, tends to be somewhat insulated because we never participate in those huge climbs, so therefore we're generally not going to fall into the deep valleys. So
here's my question. So many people, like you said, with the 401ks and where's my money going? Maybe they shouldn't panic. Keep your money where it is. Don't pull it out all of a sudden.
Excellent point. Excellent point. I just read an article yesterday, and that was the key theme. Folks, we can't panic and start bailing out. If we do, it is going to cause it to go down further. So bottom line, I think the final statement I'd like to make today, Courtney, is we will survive. You know, we've had much tougher times. We're hearing people say, gosh, the worst since the Great Depression. Well, even if that were true, we survived the Great Depression. We will survive this just as we did the savings and loan troubles in the early 80s. So we need to keep the faith. We need to remember who we are, and we need to keep focused on what's important.
We're the United States of America, Chuck.
We are Americans, Courtney. We are Americans.
Right on, Chuck. Thank you so much.
Thank you.
And coming up, we're getting into our home makeover with Bauer Design. It's all next right here on Omaha Live.